Hello traders, welcome back to Trading Life Masters. This is Z Chang here, one of the lecturers in Trading.life. I will be sharing you a simple yet profitable MACD strategy in this video. Before we start, I hope you can press the like button, share it with your friends and subscribe as well. Do keep in mind that this strategy does not win every single time. Therefore, you still have to manage your risk when using this strategy. Let's get started. In this video, I'll be going through on how I use the MACD. Firstly, you can see this is a clean chart. We don't have any indicators, just candlesticks. So you have to apply that MACD onto your chart. So if you are using TradingView, how do you apply it? Let me teach you. Firstly, you head over to indicator section, press it, type MACD, then choose the first one. So MACD stands for Moving Average Convergence Divergence. So you press it and you are going to see it appears onto your chart. So you are going to look at the settings. As we can see, 12, 26 and 9. So this is the settings that we'll use. And in the MACD, you are going to see some histograms and you are going to see some moving averages as well. MACD is actually a very good indicator because it can tell you the trend and it can tell you the momentum. So let's have a look. Let's see. If the moving average crossed towards the upside, it means it's an uptrend. So if we pull back down, we can see price is moving up. So uptrend. And what about the momentum? So we can clearly see if the histogram is green and it's above and it's huge, it means that the buyer momentum is very strong. So if you look at the candlesticks, we can see huge candles. And what if the seller side, it is similar as well. If it's huge candles or huge histogram pointing towards the downside like here, it means that it has a very strong seller momentum. The most common mistakes about beginners using MACD is that they like to buy whenever there is a crossover. So for example, in this case, we can see the moving average has crossed to the upside. Many traders, they will proceed to take a long position at this area and look what happened. Price moved down lower. So this is actually the wrong way to use MACD. You should always follow the trend so that the odds will be more towards you, not against you. Let me share you how I use this MACD strategy. So firstly, we need to know what trend is it. I'm going to use EMA. Once you type in EMA, you're going to select Moving Average Exponential. Press on it and you're going to see a line in your charts. But this is not the setting I use. I'm going to go over to settings, change it over to 200. So this is the one I'm going to use, 200. Now, how we are going to use it is, if the price is below the 200 moving average, it means that it's a downtrend. So we have to look for sells only. So where do we look for our sell entry? We go to the MACD. If the moving average is above the zero level and if it crosses down, so this is where we should take the sell. So we take the sell at the bearish engulfing, for example, and target at least a 1 to 2 and look what happened. Take profit over here. Let me zoom in a bit. So I'm going to expand this. So can you see this? Price is below the 200 moving average, so downtrend, look for sells only. Now MACD, look, we have the moving average crossing towards the downside, and remember the MACD moving average line must be above the zero level. So in this case, this criteria matches over here, and look what happened. The price just went down perfectly. Let's have a look at more examples. Let's have a look here. Price is above the 200 moving average. It means that it's an uptrend, so we look for buys only. Now it is the opposite as just now. We want to look for crossover below the zero level. So in this case, have a look at this one. We have the crossing below the zero level. So I'm going to take a long position. Once I see the cross, I'll wait for a bullish engulfing, place my stop loss below the 200 moving average or below the last low, then target a 1 to 2 risk reward and look at what happened. Price went up and hit the take profit. Let's look at another example. Price is above the 200 moving average now, which means it's an uptrend and we look for buys only. Now, when we look for buys, we want to wait for a crossover from the bottom below the zero level to the upside. So in this case, have a look at this one. we have a crossover to the upside, so we look for buys from here. So once we have the bullish engulfing, we are going to take a buy here, place our stop loss at the last low, have a 1 to 2 risk to reward, and look what happened. Price just hit take profit perfectly as well. Here comes to an end to this video. I hope you have fully understood this strategy. If you still have any questions, feel free to comment down below. I'm having daily live streams, so if you are interested, feel free to join me at trading.live. Once again, if you have not liked this video, share it and subscribe. I hope you can do so. Thanks for watching till the end and see you in the next video. Goodbye and trade safe.